As far as movers leading the Dow, McDonald's. Intel was the biggest decliner over in the S&P 500. Biomed was the winner again today. And CenturyLink was the laggard. Michael, you had a number of factors out there. Oil prices at the highest in years. President Trump speaking at the UN. Chip stocks got slammed on another warning about that group. What stood out to you amid the action?
Well, I think we saw a lot of resilience in the morning, and I don't know what to call this sell-off. It wasn't much of a sell-off. Do we call it the laughter sell-off? What do we call it? It seems as soon as President Trump started speaking at the UN, everyone was reminded that trade issues aren't resolved, and we sold off. Then again, we had this consumer confidence number at an 18-year high. There's a lot of cross currents here. I keep going back to yesterday. We had this Dallas Fed number, not one that a lot of people watch. But Dallas has been the strongest district of all 12 that report statistics and surveys. And that was a little weak yesterday. You had new orders at a six-month low in that survey. No one is talking about this. I'm talking about it, and I'm talking about it now. So, there's a lot of cross currents here. Consumer confidence high, Dallas Fed trailing off. You mentioned the chips are weak. Retail remains strong. There's a lot going on here, so there's a lot of things to buy, a lot of things to sell. Overall, we get this muddle.
Kari, consumer confidence, as Michael just mentioned, pretty strong, and consumer discretionary was the best performing sector. Is that something you think can continue for the rest of the year?
Well, it's possible that it could continue. You have seen, of course, that the economy is strong and the employment levels remain excellent, 3.9% unemployment, and wages are up 2.9% year over year, which is the highest in quite a while. But we need that to continue. And if we continue to see, as we have, GDP growth in the 3% plus range, there's no reason why we can't go into the holiday season with considerable strength in both consumer confidence and spending. And that will help the sector, definitely. But remember, one of the biggest factors in that sector has been Amazon and Netflix. Those are two names that have driven consumer discretionary. And with the new shakeup of the sectors, that sector is not going to be the same anymore.
Kari, what do you make of the overall market levels at the moment, Kari, particularly as we approach the end of this month and with it the quarter? Is there some sense that we're seeing a bit of rotation between the major indices?
This has been a bizarre quarter in the sense that the Dow and the Nasdaq have struggled all quarter. We have to go back 2 years to see a period of 3 months where you had this sort of seesaw back and forth, days where the Dow or the Nasdaq took precedence and investors threw money toward one or the other. We had a third of the days in September where we had more than 0.75% difference in the returns for the Dow stocks or the Nasdaq stocks. That's just very, very unusual. The Dow ahead 2.5% over the Nasdaq for the quarter. So, what does that mean? Yeah. It means that people bet on one day that it's going to be these big multinationals that will drive the economy and their stocks will perform. They've underperformed, remember, for the last couple of years. Or that conversely, they bet that, a company like Caterpillar or Boeing are going to be hit really hard by trade tariffs, better to own tech stocks or names like Amazon or Alphabet or Salesforce.com, where you don't have as much of the tariff risk. So, every day, like today was a NASDAQ day, and tomorrow it could be different. This is just, an unusual market, and I think that it will become clearer when we get to earnings season, when companies have to say whether they've been hurt or what the effect of the tariffs are.
I just want to add in two little elements because they featured prominently in today's trade, Michael, and that is rising oil prices and rising interest rates. And I'm wondering whether you think these trends can continue, and if so, you have to switch up exposures, like get into energy, utilities, staples. They got hammered today.
Sure. Well, let's take those one at a time. Oil prices here. People are worried about Iranian supply. People are not concerned about demand. Therefore, you get higher oil prices here. I think it's a little ahead of itself, but it doesn't mean it keeps running. I'm back to focusing on stocks, and Kari pointed out, very, very well, there's a lot happening here, but it's going to come down to earnings season. I have one key word here: margins. Why are retailers doing so well? Maybe Amazon and Netflix are driving consumer discretionary, but a lot of that has to do with the fact that they are able to, retailers have successfully raised prices and they've been able to pass those along to consumers. Maybe that's not true in other sectors. We have to ask ourselves, can retailers continue to raise prices when, if gasoline prices are going to go up with crude? That's a big, big question that we're going to have to ask ourselves. I don't like energy stocks because I'm concerned that their other costs are going to go up. If you're trying to drill oil, your costs for those trucks, your costs for labor are going higher. That's an issue. Now, as for rates, tomorrow we have the Fed. It's, you know, I joked earlier this week, there's a 1,000,000% chance that they're going to raise rates on Wednesday. Ha. But, you know, the point is this. The bond market's been backing up in anticipation of this, and we've seen global bond markets doing the same. We have to ask ourselves, what's going on here? Again, the data is giving us a mixed picture. Wages are rising. Are they rising enough to say that that inflation's going to overheat? That remains to be seen.
Yep.
Personally, I think that the bond market maybe has a little more room for yields to back up more, but at some point, we're going to hit some point, all the bond bears are going to come out from under their rocks and start cheering, at which point I'm going to be putting a buy call back out on treasuries. I've been laying low on that. I actually said, okay, go the other way tactically. That's actually been worked. Broken clocks right twice a year. And but, you know, we're going to see. I think we may have a little more room.
The guy who says there's a 1,000,000% chance of something happening.
Hey, I'm a numbers guy, you know. Think big. Think big, Sarah.